Okay, so this morning have a pretty deep discussion into FBS Center Structure, Allocation Methodologies, and some different reporting options that we have. Why did I choose this topic? It's a complex topic. Norm covers it. Was the use of some of his diagrams, but I thought I would try to cover it in some real life, some real world examples. But a lot of this stems from, after I work with a particular client for a few months and we get the balancing balance sheet in place and all the basics done, start getting questions about what's going on inside the business. How do we know, what's working, what's not working within the business? So there's just a desire to dig deeper into your business. So this presentation, I'm going to be scattered, kind of floating around between different clients I work with, but they're based on actual examples of discussions that I get into. To start off with, I worked with Melissa about a few weeks ago. I asked her if I could use her data for permission, some of the examples, and she sent me back this quote, which I thought was perfect. Couldn't have been said better, Melissa. But basically, she uses her thought process was I use centers for what information do I want to get out of software, and from a center basis that allows us to get to know profitability per unit. And that's a perfect way of leading into this discussion of the importance of centers. I'll also say, as I work with various groups, yes, everybody is different, but yet they're the same. When you start talking the center structure and the types of centers and how we group centers, the names may be different, but their concept is the same. The segments are the same. So I think what I do for Randy, Melissa, we can do for you, is everybody at the higher level from a business segmentation is the same. So a little bit about myself. Obviously, most of you know me, but when I worked, my first job out of school was with the University of Nebraska, and a lot of that work while I was employed there was putting together, university crop budgets and livestock budgets. And if you look at their budgets, that's just another form of cost accounting, managerial accounting, cost accounting, where they split things out by input items. So you have line items for activity costs. That's no different than what we have in FBS accounting today. But my first real industry exposure to this concept was back in '94, and the reason I remember it, I had accepted this position in South Dakota with the Jorgensen family in July '94, and I gave myself 5 or 6 weeks to give notice and then to make my move up there. Well, within a week of my accepting the position, Greg calls me and says, Daryl, there's a conference in Sioux Falls put on by Harvest States, a business management conference. So I attended that. So what I remember about it, here I was, still employed with the university, still had a few days left, but I was already starting with my next job. So, but it was my first exposure to some big industry names. I remember Alan Lash was there, Dr. David Cole was present, but they just kind of gave me my first exposure to managerial accounting, cost accounting. And one of the comments that was made at the dinner table, and Greg was good friends with his veterinarian that was also there. And this veterinarian, he was kind of, he just had his way, a different way of viewing things. He wasn't really, he was okay with what was going to be presented, but he just thought, he was just thinking a little bit differently. But just remember a comment, and obviously this is 30 years ago, but something close to this. The way you control cost is not comparing dollars, but by rather understanding activity costs, efficiencies, and ways to reduce or eliminate those activities. The way you control cost is not looking at dollars, but looking at efficiencies and activities. And a good example of that, again, back in my Jorgensen days, I had a budget put together, and I was going through the year-end results. And there was one line item, cost item, that stood way out. And it was custom hire. And it was like $300,000-400,000 that had been spent on, they hired somebody to come in and clean out the feedlots, all the manure out to the fields. And it was a big number. And I was a little bit frustrated. I didn't have it. They didn't tell me about it when I put the budget together. And I was, trying to encourage them, if you're going to do this, let's include it in the budget. So I was probably pushing a little bit too hard on that, because when you see a $400,000 variance, you want to make a point. Well, Greg came back, and I could tell he was irritated with me. He said, Daryl, we know we spend a lot of dollars on that, but what we want to know from you are cost savings by not doing other activities. Or by not doing this activity, but by doing some other activities. What was that cost savings? And I couldn't answer that. So I've always been a little bit wary. When I look at financial statements, I see something that's out of whack a little bit. There's probably something else going on inside the business. So what is that? And some of my presentation, hopefully I don't have the answer to how to solve that, but I think I've got some ideas how we might be getting close to that. So again, preaching to the choir here, but very quickly, the basics of FBS centers. You can see over on the right, the different center types. The top two, service, consolidating, those are what I call cost centers, and that require further allocation. And then the crop and marketing and crop centers, and then bottom three are group centers. So basically, we take cost centers and we roll them several times, move them to finally end up at either a crop or livestock center. So in my presentation, this is kind of Norm's format too, but have S centers on the right, and then the livestock center, crop livestock centers over on the, let's see, above that to your right. But that's kind of my presentation format. So as I go through it, I've got several diagrams, and I'm trying to use that format as we go through. So how should profit centers be structured? First of all, what are profit centers? When you first open up a cost accounting, managerial accounting textbook, what's in the first paragraph? They introduce cost and profit centers to you. So profit centers, in my mind, are where the revenue streams of the business take place. If you raise pigs, well, a profit center is at we post the dollars for the pigs. That's the profit center. Sell grain, that's finished goods. So what are the major buckets or major segments? And this is help from Randy, but the major segments we've identified for Randy are products, which would be your commodities, services, customer services. Everybody has some type of service they perform for another one, for a related entity or for other people. In today's world where we have multiple companies, FSA requirements, leasing for one entity is the ownership entity and leases out to other entities. Retail would be like the reimbursement of fuel, or if you grind mix and deliver feed, the feed would be considered part of the retail division segment. And then again, just going down the income statement, at the very bottom, you have other income expenses. The big ones there is your fixed asset gain or loss, and or investments. If you have an investment in an ethanol plant, that would be, I could consider those the center. So cost centers, in my terminology, not sure Norm is probably some deviation here, but I consider S centers more of a fixed asset or a resource center. That's Melissa, that's how you've structured yours. Like hog buildings or tractors, those are considered resources or S centers. Activities is that next bucket over. And on the crop side, spraying, combining, typical what you do out in the field. The livestock, I've considered barn management as an activity. You know, the labor, fuel, propane, that goes into a barn, consider that as barn management, an activity. One organization I worked with had sort crews, sort and clean out crews. Those would be considered an activity. And then every organization seems like has some form of trucking inside their business. So once we have a center structure, how do we allocate those dollars downstream? For S centers, the way FBS has things organized, it's by you allocate it by percentage. So in theory, you keep a log of all your hours for a particular, say, tractor, and then percentage those hours out and allocate them out by a percentage to a different end center. End centers are allocated by standard cost, where we know a cost driver and then establish a rate for it. So there's two different ways of allocating costs, and S centers you do it by percentage, and end centers you do it by standard costing. The traditional FBS flow of centers is you go from an S to an N, then to a crop or livestock center. That's the traditional flow that I use. And Norm, I don't know if there's other ways of using those allocations. That's my typical way of doing things. So once we go through the allocation table, what do we see the results in FBS? And my favorite report to go to is the standard cost vendor margin report. And Norm, do you know why that thing got called standard cost vendor margin report?
It was between you and Dan worked it out.
Yeah, exactly. So when I was back at Jorgensen's, they like to see things by ledger. So I would show them this standard cost vendor margin report. They wanted to see it by vendor and not by ledger. So that's how it got named. Got the vendor name in it. Randy's the opposite. He wants to see it by ledger. So that's how that got named. Okay, so I'm going to try to go through a flow here. And here we have an S center, a tractor. And this is one of Melissa's examples. So she's allocating those tractor hours, so hours, percentage of time, to these three different activities. Okay. And then when you look at the standard cost and monitoring report, here's the detail for that cat tractor. And then I always know it's a S center when I see the dollars allocated to. That tells me it's where those dollars are flowing to. It's flowing out of that tractor center into those other activities. So again, just trying to understand how this report works. So go to the next level. And in this case, with the tillage operation, there is the same dollars for that tractor. Now that I just showed from the S center. It's being rolled into that tractor. You can see it's dollars allocated from. So once you get dollars into the end center, those dollars need to get moved to the next stage. And you do that through standard costing. And in this case, Melissa's using operation acres. And those dollars are represented down here. I can tell how many cost driving units are represented in that. And it tells me the rate per hour, the rate per acre that's being charged out. So that's kind of a flow of what I call the OHAT table, overhead allocation table, with the use of the standard cost vendor monitoring. How those two things relate to each other. Okay, another type of allocation is what we call S1 and S2. And Randy, we use this quite a bit for Randy's organization. But Randy has, he has different groups of, say, pickups. But he has 10 or 12 pickups within his organization. And we want to allocate those 10 pickups all with one allocation. So there's ways of creating a S1, S2 pool. So we create a master pickup pool, and then we allocate in each of the individual pools factors into this master pool. And then when you run the standard cost of the farm report, make sure you select number 2, use S1, S2 mapping, that'll pull all those dollars together for you. It's just another way of allocation. Okay, so go through this a different way. Again, we start off with an S center, and your detasked granting S2 center. And from there, we have a percentage of time or hours that was allocated to these different activities. So in this case, I chose the full tassels, and the dollars that's showing up here pulls into the full tassel activity. And then from the full tassel activity with the standard costing, those dollars end up over the seed corn center.
So just out of curiosity, Randy, do you keep track of every single one of your detasselers? I'm assuming you have multiples in the pool. You okay?
That's what there's all the detasseling tractors have their own S center, so we keep track of the cost of each one of them.
Yeah.
So when we're trading, we know what the cost of ownership has been on it.
But we allocate it out, it allocates the farm.
Yeah,
Yeah.
the cost is allocated on the S2 level,
Yeah.
but
Yeah.
But it manages it, I think.
Yeah. No, that makes sense.
You okay?
Yeah,
Making
no,
sense?
yes.
Do you get into this kind of level of detail that you're at?
Well, I'm kind of still learning about
Okay.
it, so I'm just kind of trying to get focused and not
All right.
getting lost.
Yeah.
So
So all we're doing is just, we've got different centers and how those centers get rolled. Center
Kind
one,
of
yeah.
filter the
Yeah,
information.
down to the final profit center. Okay, another type of allocation, and in the FBS terminology, we call it labor allocations. And normally we really need to come up with a different name for that because we're finding different uses for it other than just labor. And a good example, the reason I like it is, I mentioned the normal typical FBS flow from S to an N to a C or an M center. I like this labor allocation concept because we can change and skip over flows. We don't have to follow that natural flow. And a good example would be the use of a shop. Generally, dollars get rolled into a shop in center activity. And then those dollars need to get, the tractor goes into that shop. You need to charge out a shop cost, labor, shop charge for the repair of that tractor. So how do we do that? We can't go backwards from an in center to an S. But we can do it through what we call a labor allocation. And so here we have just a shop center, and we make that allocation via a journal entry. There's some special ledgers that we set up. The entry is made itself is made through a journal entry.
So you take all the accumulated costs for that month for your shop, you do a journal, and you allocate it back to your S center?
We allocate it either to an S center, yes, back to an individual piece of equipment, or if there's some outside work done, we go out to a shop center, shop profit center.
You don't keep track of that. Okay.
So we go both ways.
Yeah. So when you work for outside, when your shop is externally hired by someone, you use the M?
That's what I got. We use M, and then each customer will be a project. Okay, does this make sense? Again, in the FBS terminology, it's called labor allocation, but I really think we need to come up with different names. It's got a broader use than that.
So what does the labor allocation function actually do?
Well, it works very similar to the fuel allocations.
Okay.
So you basically create a pool of dollars and a pool of hours. okay, through a journal entry. And then you can allocate those dollars out, just like gallons, to wherever it's applied,
The different rates.
a different rate. Well, it's at the average rate.
Right. It averages
So
all the,
if your shop costs change and you rerun it, it will update your rates.
But you have to have hours in the pool.
You have to have a cost driver, yes,
You have
hours.
to have cost.
The end center has, we have cost drivers with the end centers, but I don't have cost drivers with S centers. So this is the workaround, is to use the labor allocation to drive. It's really another way of doing the same thing.
Yeah.
It's a workaround.
Okay, let's get into a little more fun stuff, get away from the theory. And Dave Lepley, he's one of my clients in Ohio, and he's not able to join us. I don't think he's joined us. But Dave, he has a cropping operation, and he also got into feeding out dairy calves, inside confined area, feeding out calves. So a few weeks ago, a month ago, too, we were going through some closeouts with him, and Dave has a really extensive set of spreadsheets on trying to put projections and comparisons together. He's done a really nice job on where he monitors daily feed. He keeps track of that daily. But we were going through and trying to understand, from his spreadsheet, trying to compare it with FBS reports. And we came across some differences within the yardage charge. It was a little bit different. It was different from what Dave had in his spreadsheet. So Dave asked me, how do we validate that yardage? How do we know what's right? Is FBS right? Or my assumptions over my spreadsheet? Where's the difference at? So we went through a process, and as I was studying his spreadsheet, his breakdown was mainly, it was, again, pretty significant, but he had facilities, labor, and equipment as the primary buckets. So as we were talking, Dave asked me, what reports are available in FBS to validate this yardage? So first attempt I looked at was the consolidated cost analysis. It's, Randy, we don't really use it that much. I think Nikki has one or two sheets. But it's basically a entity-wide, where you put all your centers as columns and an income statement going down as rows. And for this particular case, this is the feedlot activity. And just looking through the top dollars, it didn't really help me with comparing with this spreadsheet. This wasn't apples to apples, and it's not very clean. So didn't really get much out of this report, but at least I was able to show today that how the dollars rolled up. We didn't get much out of this report. So we went to the standard cost in a model report. My go-to when we get into center cost analysis. And this is the report from 23. So as we look at it, you can see all these different centers that he has rolling into it. And to me, that still didn't help me much. We dumped it to Excel and was able to at least sort the group by labor, facilities, and equipment. And then we put $1 per day on it, and we were able to get to a comparison that somewhat matched his spreadsheet assumption. But as we were talking about, Dave was asking me, well, I don't think my tractor costs are big enough, or large enough. He thought he had more dollars in his tractor costs. And my response to him was, well, Dave, how many hours did those tractors use for feeding? Well, we didn't know. Because his assumptions were estimates. And then we talked about it, and he said, well, that labor cost seems high. And again, my same question was, how many labor hours? And what's your cost per labor hour? So at least we had dollars, but I think there's still questions on with the allocation correct. And the only way I know of, explaining that is let's get down to $1 per hour, dollar per tractor hour, $1 per labor hour. That way we start knowing and understanding the detail. And this has been a challenge that I've had my whole career is you see these dollars and then people want to start seeing more detail. Right, Randy? So and this happens every time. Randy, Melissa, I think you can relate. We've been through it. But as we start looking at center dollars, it just asks more questions pop up. And one of Dave's first question is, well, 50% of that cost was related to an intercompany rent. Where did those rent dollars come from? Well, Dave, it's what the CPA had posted last year. Okay, so we have some issues and we're working through them, but the way that the rent is being charged in prior years was it was just the number that the CPA provided to meet tax needs. Okay, so hopefully this year we're going to have a little bit more of a system in place to make it more real. And then he said, well, the reason we got into this type of confinement facility is to capture the nutrient value. So we're capturing the fluent pumping, the value the manure that we applied out in the field, is that being used as a cost reducer back to the facilities? So, we went through that discussion. Again, tractor labor costs. And then I was seeing some weird truck expenses in yardage, feedlot yardage. Why would I see a semi-tractor grain trailer in the feedlot yardage charge? Well, why would we see that? So Dave was explaining, well, there's a reason why, and I'll get to that in a minute. But those are just kinds of questions that pop up when you start reading both the center report and start trying to understand what's going on inside your business. Those are the kinds of questions that pop up. So as we were talking, of course, what's going through my mind, back to my mind, are these questions here. What's our center structure? What's our allocation process? We have proper cost drivers. We know what those cost drivers are. Those are all kinds of questions that point through my mind. So Dave asked me to put together a flow chart. I was trying to explain how this all worked, and Dave he likes pictures and see what's going on. So I put together this simplified flow chart where we have various different trucks and different trailers and labor pools, and then the inactivities will be basically based on the type of trailer, and then how those dollars get rolled out to either corn field for, say, for harvest trucking, or out to there's outside services for other people. How those dollars kind of get how the dollars flow from here, the activity, to the next stage. So that was my first attempt at trying to explain to Dave the flow of dollars within his trucking segment. So after a little more discussion, these are the types of centers that we came up with. Use S2 for these types of trailers. He's got several trailers, just like you, Randy, several trailers under each of these S2 centers. And then for activities, again, the activities are based off of trailer type, top or bottom, dump, you've got dump trailer, van hauling. And then from there, as the only way I knew of how to do it in FBS, was as I was scrolling through his list of revenues, I was just looking at the cost per unit, or the dollar per unit, the transaction cost, and it was just, varied. It was just, you can see that there's no consistency in his dollar per unit. And I asked him why, and he says, well, some things I charge on a per mile basis, some things I charge on a per load basis, some things per bushel basis. And so that's why I was seeing that randomness in the dollar per unit. So for this to work in FBS, my suggestion was to set up an individual center for each type of trailer, further allocated, further split out by the type of revenue. So we go from these different S centers to the activities to, out to these different profit centers based off of revenue. Norm, have you experienced this? How would you set anybody up like this? Or
Yeah,
seen this?
it'd been quite a few years ago, but there were different types of trailers depending on what it's being used for, and
But I think what's new about this, at least from my perspective, is separating it out by revenue. That's kind of differentiated.
So, wait, what you're saying, so then how do you tie that profit center? I mean, what do you do with it after that? So you put the, as you invoice for that, you use that center. But then what do you do with it from there?
But once you report the revenue into that center, that's the moving the dollars from resources to activities. That's all done by within the allocation process.
So do you show that?
I don't have an example, but it would work the same way like on, Andy's detaskers. You go from a piece of equipment to an activity to a profit center. It's the same flow. So in this case, we're probably going to be using miles as a cost driver. Randy or Dave is working on a spreadsheet now of all of his miles that he's hauled, and we'll come up with a percentage of time, the miles, that each of those types of resources we use for these activities. And he's got another log for his billing units, and then we'll put those in as prop operation units as cost drivers. Good, bud. So I sent that list off to him and called him a few minutes later, and I think Dave was a little bit overwhelmed with what I was putting up. And his first words to me was, "Daryl, will this work? How do I know this will work?" And I don't know if I said it out loud, but I know under my breath I said, "Dave, just trust me." But what I tried to explain to Dave, this is going to be a whole new level of reporting and management for him. It's managing all the cost drivers, managing revenue units, getting things both right center. That's just going to be a whole new level of management time and focus for him to get to this level of reporting. We also talked about how to handle equipment leasing. In a few of his transactions, he had an example of a case, time or two, where a neighbor used a grain trailer for a few days. So the neighbor had reimbursed him for the use of that trailer. So how should that revenue for that trailer, how should that be posted into FBS? Is it as a cost reducer against the trailer? Or do we set up a profit center or a lease type center as a profit center for the use of that trailer? And my response to him was, if it's just an occasional thing, just treat it as a profit, as a cost reducer. I said, if it's going to be something more consistent and more ongoing, and there's more examples of it, we really need to define that as a revenue center, but treat it as a lease within his business. So right now we're just going to treat it as a cost reducer, but I think long term we'll probably put it to a lease. But I also explained to him that we'll be using cost. I wanted to use a crop audit cost drivers as a cost drivers, and there's going to be a little bit of distortion between crop terminology and trucking terminology. But I think we can make that work. So I think we got through that discussion, and the next one we tackled was the nutrient management. And again, my first stab at it, we had the different trucks and this tanker and different activities. And again, we have, before we had a tanker hauling activity, so I wanted to maintain the use of that. And then we added a nutrient management activity. And then from those two, I would either go into a internal application, and he also does a little bit of custom service on the side, nutrient management. So I have two different profit centers over here. From the field level side, what we're going to do is we're going to value that those nutrients at a commercially applied value. And then we're going to credit that back into our internal application. So that will end up with a net cost or net value of that nutrients. So we'll have a revenue in here, we'll have the cost of application, and that net we will push back down into feedlot facilities as a credit. And the blue lines, those, I put those in blue because those would be manual disposed journal entries to make that transfer. So again, Dave's questioned me, will this work? And I said, well, Dave, the number one issue is I want to make sure that he was clear about is when he was talking to me, he said, well, what's my cost of application? Well, in reality, if you go back to his cost of application, his cost of application includes both tanker hauling and nutrient management. That's in his perspective, his tanker hauling is part of nutrient management. I said, well, they will just we have to keep them separate here, but somehow in our reporting, we have to combine those two. And I call that kind of an in-one reporting, and where we shift an in one center into another in one center. And I also cautioned him on in the past when I've done this, there's been a lot of variation from year to year in that credit going back. And the reason of that variation is the number of pumpings that we get. You know, when you go out pump in the spring and the fall, it's all dependent on weather. So you might get one pumping or one half pumpings or two pumpings a year. So that accrual, that adjustment needs to be adjusted with the number of pumpings that have some kind of accrual value in there for that nutrients that didn't get pumped. If we only got one half pumpings done instead of two, we'll somehow get credit for that half pumping. Or we'll start seeing a lot of variation in our credit back in the feedlot facility. But I just cautioned Dave that we need to consider that if there was ever an abnormal type year. And then also bringing in this transfer center terminology. In a transfer center needs to be a net of zero at the end of the day. Okay, again, we're going, this is all discussions that took place as that one discussion on looking at feedlot yardage. And like I said, there was some outside dollars, there's some strange dollars related to trucking and labor costs that Dave was questioning about. Well, as we were talking, Dave also has a offsite location where he hires and contracts out to feed out some of the younger, lighter calves. And they're in this offsite site for a few months and moved them over to his home site. So as we were going through that list, he says, well, I needed a way of allocating my cost of trucking that feed from my home site to this contractor site. How do I handle that trucking cost? And because originally, when he first set it up, he was going to have the home site absorb that. But I suggested that, hey, we just need to set up another in-center for external contracting part. And it's really dollars over and above what he's paying as a direct fee to the vendor, because these are additional dollars he's costing him for this offsite location. So, so going through that, here's an example of a grain hauling feed over. Again, going to use a internal feed transfer center, and We already have a drain hauling activity, we want to maintain that, integrity of that center. So we're gonna transfer it out to an internal feed transfer center, and then journal entry that back into this external yardage. And then the additional dollars, labor pool, Dave goes over and does odds and ends and help with maintenance. The time related to that is also gonna be added to this external yardage cost pool. So at the end of the day, his yardage charge for this offsite will be the fee that he pays the contractor, plus these additional dollars that it takes for him to support that offsite location. So this is my diagram of trying to get to that level of detail for him. And again, this all started by this one conversation, and David wanting to know, honestly, a lot of this discussion was, should I expand my home site? Well, we want to make sure our yardage cost, we knew what our yardage cost was. We were adding a lot of extra things into it, to this contract. So hopefully we're able to narrow it down to more of a reality, what it's costing for both sites. So they've never logged in. I don't think they probably did. Yeah. Okay, look. So that's kind of where I'm at with Dave. I've been working with Dave about a year now, but after we got balance sheet back in balance and started digging into the centers, those are some of the questions that we've been working through. Okay, also work with Melissa in the back here, and she's allowing me to share some of the discussions that we've had. And when I first looked at her center structure, I was kind of blown away. There was a lot of detail there. There was a ton of centers, and as I was scrolling through it, I could see that Melissa had the pretty good concept of the S and N centers. Her fixed assets and resources through her S center. I could tell what her N centers were. I think she had done a fairly good job there. She just needed some help in getting the final allocation process in place. But I will say, looking through that center list, I could see multiple trains of thought. I could tell that she had help with different people. There was types of centers that were very generic, kind of a peanut butter spread approach, or types of centers that were more detailed approach. So as you set up your centers, be thinking about how detailed you want. You want more of a peanut butter spread or a more detailed approach? Because I think Melissa was kind of going down both trails there for a while. So the way we started, we did the best we could with 21 and 22 data, and then that allowed us to make some changes for 23. And we're slowly making center changes as we go through there. Any comments, Melissa, or am I overstating, or hold me to the truth here? So one of the questions Melissa asked me was, Melissa's very detailed and wanting to know, and I appreciate that about Melissa. She asked me, how do I know that all the centers are properly allocated? She's got a bunch of them. How do I know that they're all being allocated? And the first report that we went through was the standard cost rent one report. And we showed that, explained to her how the variances work, adjust the rates, variances go to zero, the rates are set to actual. But she had found, when looking through that one summary table, she had mentioned and noticed that there are some centers that weren't on that list that she thought should be on that list. So sure enough, we went and looked at the detail and found that those centers hadn't been allocated yet because they were lacking cost drivers or the rate. They just weren't showing up in that summary. So the standard cost one report is useful, but it's defined to make sure to answer her question. What is your report? 40 pages, 50 pages? It's long. It takes a lot of, be very, it's hard to find when you got a missing center. So the other thought that I had was, again, going back to the consolidated cost analysis report. Again, that's the report that lists centered across, the income statement going down. But one of the features of that is we can have center mappings where we can map centers into different columns. So this is my first attempt at trying to simplify her center structure by using this map. And when you run that report, again, the centers are going across, and I was looking at the variances with that net income line. And for those N or S centers, if there's a dollar amount there, that told me something hadn't been allocated. And how you can do that, you can drill down and looking at the detail for that mill in center column, there's 4 or 5 centers that haven't been properly allocated out, but we haven't done it yet on two. That's just a way of finding centers that need more time and effort. Any questions?
How often do you recommend to check like everything is working good?
I like this kind of thing.
Mhm.
When you do your year-end stuff, that's probably when I would suggest, like in Melissa's case, your crop, your crop base, probably at year-end. But if you're more livestock and want more quarterly type reports, you can probably do it more frequently for livestock.
Or
Yeah. Because livestock is more continuous flow, crops and season. Because, harvest cost doesn't happen until, fall. And there might be dollars in that center of spring. Why? You just haven't done it yet.
Thank you.
So another question that Melissa had was we were running through one of her cost analysis reports. And when I set it up, I have ways of making sure it ties out. I ended up with 4 lines for animal health. Melissa asked me, why do we need 4 lines for animal health? And the reason is there's different ways that dollars were posted in animal health. First way, dollars were posted in just as to each individual group. She got an animal health bill. She knew which group it went to. That's where the dollars went. The second way is if there's an animal health bill which you didn't know, kind of generic supply, didn't know where it went into an animal health activity center, so we could allocate it out across all groups. And then the third way was there were just a handful of entries that she had used the animal health inventory component of FBS. So in my report, we had 3 different ways of data entry. And I know Melissa and I have talked about the reasons for doing that. And the animal health, the inventory way, we're fixing that. We're not using that in the future. But the reason we have different line types is for different lines is because the cost analysis requires different setups for each line. So again, when you show up to a management and they all of a sudden see 4 lines, it's kind of confusing. But so my encouragement is to have one way of having the data entry, so we just have a single line for reporting.
Collapse it into a executive summary.
Collapse into a single line. So I bring that up because as we set up incentives or activities, and Melissa, I don't remember the story on that, but that was probably done after I got started in animal health incentive. And if I'd known that you'd be posting it directly, probably would have continued doing that. But like you say, you're using it because it's dollars that you don't really know about. Okay, some other challenges that we have, and when you run these cost analysis reports, they're frustrating at times to use, and you may get different answers. And a lot of the reason is we have a mismatch between the type of center that you use versus the ledger and the ledger integration that you use. And in this case, this is looking at the smart feeder input history report. We have a record type of animal sales, but you can see that the general description is obviously not a animal center. So whenever we post and whenever I see an animal linked ledger in a non-animal center, I encourage people to change it to an animal center or change it to a non-linked count. Just because some reports may or may not work correctly because we had it wrong in the mismatching of ledger type. I know the transaction plus cost analysis, that's very sensitive.
Mhm. I don't think it has a way of verifying it. You gotta visually verify that. I don't think it's gonna give you a yellow.
Yeah, it doesn't tell
Fine.
me. Yeah,
Yeah.
it's
There's a lot of those verification reports that you can go to, but that's not one
I
of them.
made a comment that this report is difficult to use for what's at, and that's one of the reasons why.
Mhm.
It's just being able to find and track those things.
Yeah.
You're smiling.
Yeah.
Okay, another question Melissa asked me was, what's the real reason for FBS divisions? How do we use FBS division? And Melissa uses the intercompany module. I said, well, the first reason is for the intercompany module for the intercompany transaction. That's one reason for division. And I explained I've seen divisions used for segregating personal expenses versus business expenses. Like you have a fuel ledger, and it's a personal fuel put in personal division. The business fuel you put in the business division. That's the way they were maintaining the two types of expenses. I have another client that uses the 6 entities that we have inside one FBS entity. In this case, I don't think there's over 15 or 20 transactions a year that take place. So it's a very simple set of books to maintain by division. But that would be if there was any more transactions than that, then I would not encourage using divisions for entities. But I think the biggest challenge that I have with divisions is, again, back to our allocation process. Divisions are ignored in the S and N center allocations. So if you're doing a lot of allocation in S and N centers, divisions, everything is kind of washed together. Would you agree? Is that a true statement, Norm, or that's how I see it?
Right. I mean, we've had people use divisions differently than what we planned on.
Yeah.
Uses it for farm or something like that. But you're right. I think the standard practice is if it's a different business entity, different fiscal year, different database, use a different home division and intercompany division. The others are, that introduce these other issues and.
Yeah. But anytime we start doing allocations between S and N centers, divisions mean nothing. So I don't really encourage the use of them other than intercompany transactions. Okay, I'm sure this question will come up, and I don't have a good answer, but what's best practices for center codes and how we structure things? FBS allows up to 6 digits for center code. I would encourage the use of all 6 when we can. Resources, like to use something in the form of XXX and then 00, the 00 being the S2 center. If we ever need one, an S2 center, then 01, 02 for every metal tractor, combine. For activities, use 6 digits. Crops, 5 digits, and then the 6th digit would be your WIP center, feature WIP center. Marketing centers, I generally see an M front of marketing centers are for M. Randy uses SB. But we also need a year designation. The livestock needs some kind of designation for the site, for the location.
So, yeah, any crop center or livestock center that's driven off of inventories need to 5 digits because it will automatically assign a whip.
Because it'll automatically assign a whip center at 6 digits.
But you don't want, I see some really complicated center, inconsistent centers, and that's definitely the best practice, and let it assign the whip center.
So, you know, to me, this is an area that I think MASA needs to put some structure together with, for something that's kind of a standardized set of
There you
ways
go,
of doing things.
right there.
Well, this is a start, but what I really think, you know, this next session I'll be talking about PowerBI and different reporting methodologies that we use for centers. As we learn more about PowerBI and how to set things up, I have a feeling that we're going to be restructuring to have different. We're going to be thinking differently on how these centers are structured. I just see that we just need to get more experience with PowerBI to have a better feel for how this center should be structured. So in closing here, for this part of the presentation, there's many more issues to address, I know. And one of them is an S-centered resource within a resource. And a common example that I used to have to deal with is they would take the loader tractor, work on a pivot. How do you charge that loader tractor out to a pivot from S-center to an S-center? Any thoughts? I don't have one for FBS.
Yeah, journal entry, management journal entry, but you still,
But that's
still losing.
it's a estimate.
Yeah.
Yeah, so it's things like that. And then another example was using a skid steer to go clean out the drainage pipes when you were doing it. You know, one of the families that I worked with, they were very keen on making sure that the barn, the hog side, was charged what they need to be charged for the use of somebody else's equipment, for another segment's equipment. So that's an issue that we need to, I think, MASA needs to think through. In Randy's case, he has a large storage facility that he uses for equipment storage. How do we take the cost of that storage facility and charge it back to the N1, N2 reporting, we kind of mentioned that earlier. Back on Dave's example of the nutrient management, nutrient hauling, that's really one activity, but we want to calculate the cost on separately, but we want to combine them in somewhere in the reporting process. Other examples would be combining the grain cart, at the combine, you have grain cart. How do you add those together? Because you fill out, or when you look at when you're comparing the present rate to what are you comparing against, that combining charge generally includes the use of grain cart. So I want to make sure both are included. So silage chopping, those 13,000 ways of putting up silage. How do you come down to a common number of cost per ton for silage chopping? And that's adding in different activities. On the livestock side, drying, mix, and delivery. Generally, that's drying, mix, and delivery. So, is it one charge or is it two charges? Why are we comparing that? Another item that comes up occasionally is where we have internal service, and then we also hire out that same service. And trucking would be the common one. We have our own internal trucks, and then harvest time we go bring in a couple trucks during the busy season. How do we code those two transactions? Obviously, the internal trucking is done with cost track. But where does that internal trucking, so that hired out trucking, how does it get costed out? Is it a journal entry against the field that it's used for? My point is on a report, we'll have two lines, one for internal and one for external trucking. And that gets confusing. Why do we have two lines? It's just one line, one on service. So I think that's an area that we need to address inside MOSSA. It's what's the best way of managing those kinds of provisioning. And then G&A, debt servicing, edge allocations. Those are always hot topics. Yesterday, when talked about contribution margin, there was a comment I made a comment about what's considered financing, and the example I said, it was just interest. But again, working with Melissa and her marketing advisor, on their form, their debt service included principal. So what's the right terminology for financing? Is it just interest, or is it both principal and interest? Just from the marketing perspective, we want to look at it from a cash flow perspective. I don't have that answer. So that's all I had from this first hour. Any questions on kind of the FBS allocation and center structure? This next session is more geared towards taking the concepts that we had gone through here and incorporating them into a data analytics tool called PowerBI. It's just different ways of reporting, and the importance of center structure becomes very apparent when we get into these PowerBI reporting tools. But first, any questions on what I tried to go through here? Randy, any perspective from your? Okay. You got in late, but
Yeah, I was meaning to be here when you started. They ran over in the last one.
okay.
Yeah, it's being recorded, so.
I got a lot of questions, but we'll start over.
Okay. Well, let's take a quick break.
Yeah.
What time is it now?
It is 11:05,
So
so,
we'll begin.
yeah, if you
So
want.
let's
Yeah,
give us
go
about
ahead.
5 minutes, and then
Okay.
we'll start
All
on
right, well,
the second session.
thanks. Who we got? Tyler.
Gary, did you have any questions? I failed to keep you in mind here.
No, thanks, Daryl. Doing fine.
All right.
Norman, I was just thinking this could be your last year or putting this, hosting it or organizing it. You don't know.
Last year, we're gonna get paid.
Uh-oh, and he's looking at different modules. I feel like that is so.
Okay,
Well, should we get started?
yeah.
Okay, Gary, was it Tyler? Are you guys still with us?
Yep, I'm here.
Good, good. I think we'll get started. So what I want to talk about this hour is um, some efforts I've been putting into a tool called PowerBI. Maybe.
Yeah, just a minute. Okay, now try it.
Okay. So, with the last session, we talked about center structure and reporting out of FBS. How can we take those same concepts of FBS and implement them inside this data analytics tool called Power BI? So the reason I have focused on this, I've been doing this FBS for a long time, and I often have criticism coming back at me. And some of them these are just a couple of them, but slow in providing reports, never have what is needed when it's needed. I do too much reporting in Excel. And then obviously Excel gets dated 30 seconds after you type it in. So there's just Excel's a great tool. I love Excel, but there's also what's called spreadsheet hell. And how do we avoid using spreadsheets so much? And then 5 years ago, had some career changes, and at that point, I was frustrated. I was discouraged. I didn't like what I was doing. I just needed to change, needed something different. So I've been reading about this Power BI. So I told myself, if I'm going to make a difference, I'm going to be bold and see if I can't use Power BI to be more effective in my work. So, and I think the bottom line for all this, my efforts these past few years, is really in the area of the challenge that I'm having is getting data presented in a timely manner that's readily consumable for decision making. That has been a struggle. Okay, I think we can all that you're nodding your head yes. And I know Melissa would agree, and Randy would agree. So that's kind of what's driving my focus in this. And like I have right here, I was sick and tired of being sick and tired. So what happens when you get that point? It drives change. And so that's why I'm so focused on in this area. If I'm going to stay in this line of work, I don't want to do it the way that I've been doing it. And I saw Power BI as a way of enhancing what we're doing and providing more of a value, more of a service. So what is Power BI? First of all, it's a Microsoft product. It's part of the Power Apps platform, and it's that Power Apps platform. There's a lot of things inside it, but one of them is Power BI. These are the major components of Power BI that I'm using. It's a big product, and it goes off in different trails, many different trails. But I will say that last summer, Power BI came out with kind of a major change. And basically what they've done is they had taken technologies from other things that they built in the past, and they've all put that inside the Power Apps platform, the Power Apps umbrella. So all of a sudden now we have what's called data lakes and data marts and different storage tools and different ETL processes. So this Power BI, Microsoft is dumping a lot of resources into this technology. So I don't think it's a technology that's going to go away. But are there competing alternatives out there? There are a few, but when you read the Gartner report, Power BI is by far exceeding the other people in this area. So basically, Power BI is a way of taking data from multiple sources, integrating it, combining it, manipulating it, putting some calculations behind it, and then generating various types of reports with different ways of visualizing the data is what Power BI is. And I don't know how many of you remember back in the COVID days. I remember going to the New York, I think it was New York Times newspaper. They had a really nice dashboard. And basically, you could click on a state, and then you could click on that state and then drill down to the COVID rates in various counties. Well, that was all based off of Power BI. So, how exciting is that to be able to, click on something and then drill down one more level? So, how can we incorporate that into the FBS reporting? So, I get excited when I talk about this. I just see so much potential. The automation, the process it goes through, you set up refresh cycles. I have it set up for once a day of a night. So it go out and pull in all the data from FBS, spreadsheets, wherever it comes from, and goes through the calculation process. And the next morning, all your reports are current. There's no manual entries. Everything is there ready to view. I've seen reporting that I've never been able to get to inside FBS or Excel. I know the numbers are there, and you really get to some interesting ways of viewing your data. Integration with Excel and PowerPoint. I'll show some examples with Excel in a minute. But I remember, when I had family meetings, how nice it would have been to have PowerPoint presentation put together with some comments, and then having a live report, a live dashboard pulling in during your presentation. How nice would that? How nice would that be? The other thing, like in terms of Randy's, he likes to have PDFs or something emailed to him. You can set up subscriptions and have reports emailed to you daily, or how frequent you want. And Melissa, this batch reporting, this concept, how you put together your monthly financial statement, balance sheet, income statement, aging reports, there's 4 or 5 reports. I think there's ways of batching those reports inside Power BI, and you do one click and it'll generate all 4 or 5 reports, at one time. I see that potential. Seeing it and doing it are 2 different things, but I know that I see the potential there. The potential that I read about, I don't really understand it, but I read about it. Predictive analytics, key influencers, where you could say take a field, individual crop field, and they will put a diagram on what are the key influencers behind that profit. Is it yield? Is it an extra time of combine or an extra time across the field of tillage? What affected that cost? And that's a key influencer report. So I just see a lot of potential. So what I'm about to go through, a little bit about it. This has been mostly a personal effort with utilizing some of Randy's data. I will say that it has not been easy for me. I understood FBS, I understand Excel, but I didn't understand Power BI, and it was a pretty steep, and continues to be a steep learning curve.
How many years you've been working?
4 or 5 years. Yeah. No, not full time, but as I can, in evenings and weekends, on top of everything else. So, but some of the reason it's taken me longer, is there's a whole, list of things here are processes that, as Randy and I have talked, that I've been able to develop and build into PowerBI that's really over and above data coming out of FBS. So it's doing additional things over and above FBS. So like I said, this is some of Randy's data. So with respect to Randy, won't have a live version, a live demo, but we'll have some screenshots and things shaded out. But I need to be honest that, Randy and his staff remains hesitant on adoption. And I think I've listed 3 or 4 of the items. Some of them are technical related, just my not knowing how to do things. The presentation, I struggle with some of the presentation. And I think I'm trying to do things that's outside the normal reporting capabilities of Power BI, especially when you have a lot of columns going across. You kind of exceed the range of your screen. And that makes it look awkward, and it's just hard to manipulate, navigate. It's just not clean. And then also, I think we see numbers that don't understand or expect. So it's something I've done alongside Power BI, or is it something we didn't know about at FBS? We've had multiple conversations on, maybe you see something and then where's the real cause of the problem at? But doing that, I think we found some holes in different areas. I know the shop cost was one, the G&A allocations on your custom services was another hole that we found that we were able to cover. We were able to find some issues that we need to go back to the FBS and work with. And then I know when Randy will call me, he'll be talking about certain things. And I don't know if you've noticed, but he'll be talking about certain things. Well, I can navigate to the dashboard and answer his question just within a few seconds. That's because I know where it's at and I know how to read it and I'm used to reports. So I see so much potential with what we've done. But I still have some issues, or I need help in some of these areas here to really make it effective. So one of Randy's goals was to create what I call a production year report. And that's basically looking at all of his centers, profit or cost centers, across production years, across time, across production year time. So we have, in Randy's case, we have these different business segments, which we talked about in the last session. And how do we match different time intervals? Because products or crops might be a 3 calendar year versus a leasing segment might be just one calendar year. How we match that all into one report? Well, there's ways of doing that. Then Randy, we all want that drill down. Be able to see the next level of detail. But again, I want to stress that what we talked about last week is going to be critical for the type of reporting that we're going to get out of Power BI. It's going to be very critical. In the past, where we may not pay much attention to centers, well, those will become obvious inside some of these Power BI reports if we don't have that set up correctly. So here's an example of the types of segments and centers, profit center Randy's has. This happens to be an ownership and operating center. And in this case, we got product services, retail leasing. And I just drilled down on leasing, and that would be different groups of equipment that he leases out to related entities. So we're able to keep track of his profitability for each piece of equipment from a leasing perspective. So that's entity A, and then the second entity would be more of his operating entity. And obviously crops are more focused over on the operating entity. Services, where he does outside work for landlords, mostly landlords, are we charging enough for those services? And the understanding of profitability, those services. So that's kind of a high level view of what the production year report looks like. So in practice, this is over 4 or 5 production years, and each of those numbers represents the net income for that year and for that production center. So the theory is, the desire is we want to click on yellow corn 22, it would pull up an income statement for yellow corn 22. Okay, and for this example, I just showed dollars. We could have dollars per acre, dollars per bushel. But for the screenshot, keep on the screen, I just put in dollars, but we can have all three. And then from there, we can say we want to know more detail on spraying, drill down one more level, spraying. You can see the detail at this, at the crop level. So that's getting, pretty in depth. We start out at a high level, and within few clips, we can get down the spraying cost within yellow corn. That's the goal that I think we can get to. So on Randy's leasing division, it's in his ownership entity, and we talked about different groups of equipment. I drilled down on combines, and you can see we had 2 combines that was leased out to this related entity. You can see the income statement for each of those combines. Again, I just have dollars, but we have dollars per hour on it. So how would we accomplish this leasing division in FBS? We start off with an S center, and we want to shift those dollars clear over to a profit center, probably to an M center, marketing center. How would we do that? Or,
Well, yeah, use standard cost to drive it over to.
Let's see, where's that at? So, how would we do that? My suggestion, Randy and I have talked about, we would set up an M center, and then each project would probably be a group of equipment, and then we would use the labor allocation fee to shift dollars from the resource level clear out to the profit center level. So we'd probably use the labor allocation fee to make that happen. That would take a magnitude of journal entries and take a ton of, there'd be a lot of bureaucracy to make that happen. Mm-hmm. The number of pieces of equipment and stuff that Randy has. But here, if we have things coded correctly, it's just part of the refresh process and it's there. That's.
So basically through PowerBI, you're reallocating.
Yes. Okay, so in FBS, where we have the S centers, which are based on percentages, okay, that's how FBS knows it by percentages. I've done away with all the FBS allocations. I've created my own allocations within PowerBI, calculating all those inside this daily refresh that I'm doing. And it allocates it out based on hours. But I'm pulling those hours in from an Excel spreadsheet, PowerBI, doing those calculations. So Randy's working on some other projects in the app, and eventually will be, entered through an app, and then those hours will fall into here without any human intervention. So the hours that Nikki spends on doing what she does could be done overnight. You just got to work on reporting. So from an operating entity perspective, I chose combine soybeans, and the way it works in FBS, at the top, taking standard cost, and then it shows up on the FBS soybean report as a single line. That's the FBS way of showing those dollars. In PowerBI, what we do is take that same center and create a income statement, do a better job of things ledgers, group by ledger or fuel, and from there we can allocate those out to the soybean crop. Again, we get to that same level of detail of within soybean crop, we can see the detail that's related clear back to the activity level.
So you're not attempting to reconcile to the balance sheet.
Well, the web stuff is still.
You're letting that happen, but this is running
This is more-
separate methodology.
This is bypassing the FBS allocation process.
Yeah.
Not the whipping process. Not the dollars from the balance sheet.
So does it match close enough?
For the most part it does, yeah.
Uh-huh.
Where there's differences is where the S percentages don't quite match up. Because of changes,
Sure.
or something's not quite matching up in our S allocations. So another concern that Randy had was we have this lease expense over in the operating activity. And what makes up that lease expense? So all we see is one number. When dollars are posted, it's posted into one ledger. What's inside that? Where is that? Where are those dollars being originated from? So if you code things right, using the description field in FBS, we can further define what those lease costs are related to. And then it'll show up in the report, the activity report in this way. Why individual pieces of equipment, resources. And then over at the soybean crop level, that lease cost would show up under resource costs.
So at your organization, who wants to know it to this, like what is driving your desire to see it? When you put it into a lease cost ledger, it was on the same account spending line. You see that lease cost amount there. What's driving you to detail it out?
I think your question. So at the activity or operations level, whichever way, whatever word you want to use, but that's really powerful in my mind for the managers to see the cost per hour per acre on this field was this, and it was that much on that field. It's field size, it's, whatever, if they were taking too long to get something done, if the weather was bad, whatever, maybe they can come back and justify a number of those reasons, but just to see the disparity in cost per acre from one field to the next, I think it's just amazing.
Melissa, one of my last slides, I'll show you a degree example of that for you.
So are you driving that you want your crop managers to know, or are they asking for this?
I think it's a learning curve for both of us.
Okay.
You have to learn how to be a manager, right? So you have to have the information in front of you. So maybe something they don't necessarily care about today, maybe they'll understand that it's really a powerful tool tomorrow. So maybe it's more a push on my part, but I think you didn't know what you didn't know until now you know it, and that's pretty interesting, I think.
One of my examples up here, and I'll show you why. Okay. So again, how can we do this in FBS? We can create multiple ledgers for different equipment groups, so at least we see it at this level. Or we could repeat, duplicate the S1 centers over the operating unity, and we go through the overhead allocation process. But there again, it's more bureaucracy to maintain. Okay, another area that we're working on, or we worked on, is fixed asset reconcilement. And if we have our centers separated out by the different resources, why can't we tag a balance sheet to all the different centers, to all the different resources? So, so can we create a schedule that will basically tie to the balance sheet? or to the income statement. And here's the example that we were able to generate, where we have, again, list of all of its centers, resources, groups, and individual pieces of equipment. And we can see the prior year, all the additions, pluses and minuses, and then there's gain or loss for each piece of equipment. So why is this important? Why is this important? The family that I worked with, was employed with in, up until about 5 years ago. They had a construction company that was inside the farming business. There was a son-in-law that was trying to generate that was his interest. So I was trying to run a construction company inside FBS, and all the reports that I was running, it was showing poor profitability. Just never made any money. And there was a little bit of animosity that he generated. He didn't like my results. He didn't trust my results. Okay. And one of the reasons was my depreciation was too much. He said, all my gain and loss. He said, I sold this equipment and I think you've over depreciated, so I really got a gain on my service. Okay. So I went back 15 years, tens and tens of trades of looking all his equipment block, selling and trading and all the jacking around he did. And that was a very difficult process to go back and clean up. But I found that he did have the gain that he thought he did. Okay. And it caused additional friction between us. And if I had this report on a yearly basis, so we could have seen it up front, I know it would have relieved a lot of the stress that was in our office. Just because I didn't have this type of report that we could see every year what its true gain and loss was. To me, that's important because it was causing, there was stress within the organization because I didn't have it. We did have it kind of. And then when I did have it, I didn't trust it. So Melissa, when we were talking about the your resource equipment list, this is what our discussions, this is what I was trying to explain.
In your defense, I've tried very hard to make the inventory register and asset register. I want to use them. I just can't use them for that.
Yeah, and that's, the inventory register is not compatible with what you're doing as far as, but asset register, that has some.
Yeah, we couldn't get it to work where there's problems.
Yeah.
But that was, Melissa, as we were talking, that was the kind of example I was trying to get people here.
Yeah.
So another positive component of PowerBI, being able to integrate it with Excel. And here's an example of a Randy's trucking company where we pulling in actuals, plus we have a forecast for the beginning of the year, and we're being able to generate forecasted profit for each trucking service. Magic part of it is all the historical, the actual, are available at Power BI, and we can just grab special formulas and go out and pull those numbers into the spreadsheet. And I just bring that up because all I know is I've spent decades of my career typing numbers from FBS and Excel. And this is something that I know somebody in my role would appreciate. And I wish Dave was online, but we're putting together a similar type of forecast for him where he has dairy calves, where, the dairy calves take up to 14, 15 months to develop. And he's in the marketing phase and he wants to know what his cost production monthly. So we got the actuals coming out of FBS and we got our forecast being generated in Excel. How do we marry those two? And my vision for Dave was exactly what I just showed you on that prior screen, being able to pull those values from Power BI. And that way there's no dumping reports and, the data is married together. I see that as a very valuable tool. So Randy sends me lots of emails. And this is an email he sent a couple weeks ago. He had conversations with his son about some decisions that have been made within his trucking company. And there were some services that were discontinued, and Matt was kind of concerned if that was the right decision. And you can read some of Randy's email. But so how do I respond to that type of question? What did we hear about yesterday? Contribution margin, bingo. So I was able to pull up a PowerBI report for this trucking firm. Here's all the services, and you can see that I have contribution margin and contribution margin percent, and you can see right away which of those services was contributing to the contribution margin, or those that were not covering the variable costs. So when I showed that to Randy, the first thing he mentioned, well, I want to see the details, so I pulled up this income statement and showed him the format. But the next question he still wanted to see more detail. So, the importance of having timely information when you want it, and then having the ability to drill down when you need it. It's critical. You need it. And PowerBI is one way, hopefully one way of getting there. And so when I say Randy wants more detail, he's got what he calls cost calculators, where he calculates his cost of fuel, cost of labor hour, the different pieces of equipment. And basically what I would like to see is that same type of detail that he's got these cost calculators inside some of these activity reports, where we have, like, find the number of labor hours, what was the cost for that labor hour, fuel gallons, cost per fuel gallon, what was the efficiency of those fuel gallons. So why is that important? Again, you go back to university budgets. If you've seen those recently, a lot of them have those input rates, they have an efficiency, and it outlines the steps that it takes to get to that final number. And for us to understand our cost per unit, there's a lot of detail that goes into that final number. So we need to understand the factors. It's just not a raw number, but there's all this additional detail. So one of the I want to stress this point, but when I was working with Berkeley family, had a nutritionist come in, and we were going through closeouts, and we had a veterinarian on staff, and he had all kinds of charts on daily gains, feed conversions, and feed, sales full, about everything you could think of. And then I pull up my FBS closeout reports, and I get to a line that was called barn management. Okay, and he said, "What's inside that? What's inside that? What's inside there?" And I was trying to explain to him, well, it's propane cost, utility cost, there's labor cost, there's use of vehicles to drive back and forth, all the things that go into farm management. And then he started asking, "Oh, how many gallons? What would it cost for propane?" Well, I didn't have it. I could go back to the FBS, but I didn't have it at the time. And then he asked, "Well, how many labor hours per space do you have? Does it require?" I didn't have it. But what was embarrassing about it was he, as I was trying to explain all this, he pulled up a spreadsheet that he maintains, and for his closeouts, and it was pretty close to that same format. He knew his gallons propane, he knew gallons per space, he knew his labor hours. How he was coming up with those numbers, I don't know, but he had it all in the spreadsheet.
See, it wasn't necessarily directly from the farm, though. He was making a bunch of assumptions.
I don't know where he came up with it,
Right,
but from when I was sitting in that meeting and had family and everybody sitting around me, that he could provide it, I couldn't.
Mm-hmm.
I left with my head between my knees. It wasn't I didn't have a good feeling. And honestly, ever since that was one of the defining moments, because after that, the family lost confidence in what I was doing, because I wasn't able to provide some of this level of detail. So, I just want to stress, I think this is very important. So, Melissa, you asked about equipment costs. Why do we want to manage lease costs? Here's an example of a combining charge, and it's a couple years old. And as reviewing it with Randy, I told him, hey, there's a $20 change per acre cost from 1 year to the next. And obviously Randy asked, where is that change coming from? What's causing that change? So again, I pulled out some cost accounting books, and when you look at what's called variance analysis, it looks at, the impact of price change for fuel costs, or price change for labor, your efficiencies, the ways of calculating the impact of those different factors. But in the big picture of it, and I have it blanked out, but the major reason for that change in cost was his lease rates. He had increased his lease rates down on his comp line for that year. So that's one of the reasons Randy wants to have it split out. Is when we see that kind of change, well, where did it come from? It's lease, which piece of equipment? But I think this report, we've always talked about controllable and non-controllable costs. I think this is the type of report that we finally get to start segregating what's controllable by different managers and what's not controllable by different managers. And it goes back, remember that first session or the meeting I went to in Sioux Falls, talking with a vet practitioner. I think this is the kind of thing that he was trying to explain, let's give this level of detail, of understanding your efficiencies and your costs. That's what he was trying to explain. That was what he felt was important. So that's a lot of numbers to be pulling in. And I just remember, probably 10 years ago, I was over at a friend's house, and we was talking business and what I was doing and the frustrations that I was having. And he said, Daryl, come back to my office. And he works for a small manufacturing company there in Lincoln. And he took me back to his office and pulled up the dashboard. This was 10 years ago. And there was a list of factors that were out of range, that required management attention. And I just remember reading, when I saw that, I went back and did some research or try to understand it better. And what it is, it's a management exception reporting. Is the intent of the report is to focus management attention on just those areas requiring immediate action. That's what I would love to get to. That's what we need to get to, is having a report that Randy can use to say, hey, my efficiency is not up, off a little bit compared to target. Our fuel cost is changed from what we thought it would be. How do we get to that exception level reporting? That would be a dream for business. Come on. So in closing here, so bringing lunch in, going back to the this presentation, as I work with clients, just start looking at your centers, and especially that standard cost minimum report, and asking the questions. Is like that one afternoon discussion I had with Dave on feedlot garbage. That turned into probably 6 weeks of further questioning and understanding. It'll take time and look like the cap, start asking questions. There'll probably be some coding issues, maybe some center structuring issues. Just review what you have. And again, in my whole life career, this has been a real struggle for me. And again, reason I've been focusing on PowerBI because I think we can resolve some of that challenge. The tools that's available within PowerBI. I just have a lot of hope and excitement with it. I'm not there yet. Randy's, it's not really professional what I've done, but the underlying concepts, I just have a lot of hope in it. A lot of hope. So with that, I just want to close out with Melissa's comment to this. Reason we have center structure is per unit cost reduction. that's why we're all probably using FBS today is wanting to know our cost production. And the way to get to that is to our centers.
So how and who do you envision rolling out Power BI to? How would that be adopted? Different size operations. I mean, it looks pretty sophisticated.
No, I don't think it is, because it's all driven from FBS reporting. What is new is pulling in Center cost drivers.
Mm-hmm.
Okay, that part is new. That there's this discussion around that. But in terms of the allocation process, people don't want that. That can be taken out. But in Randy's case, wanting to see the detail and drill down, that was why I wanted.
So if I'm reasonably competent in Excel, I could adapt Power BI, or need somebody hold my hand, or some models to work from.
No, I wouldn't advise you to take the same road I did. But I think MASA needs to come up with a foundation, a solid foundation, which does all the manipulations and getting a what they call a data model.
Mm-hmm.
And within that data model, it would be different measures, different calculations, maybe some quick reports. Okay. And I still think, like in Randy's case, if we had 15 or 20 common measures, well optimized calculations, those 15 or 20 would do everything that we showed here. And but I think getting those in place, and then people could go and design their own reports, do what design it the way they want. So, but I think there has to be a foundation built before you release it to, unless there's other idiot Daryls out there. We'll take this on. But I would not. If I would known what was all involved, I probably would have found a different occupation. But I'm glad I did. Whether or not where it goes, I don't know. But I know if I hadn't tried, I would have failed. I would consider that a failure. But I did try, so I've done the best I can.
Yeah.
I think with Power BI, Daryl has there's tables, there's things that are missing in FBS that he needs, that Power BI needs in order to make reports. So he has to set up separate tables on them. So just understanding what those are.
What those tables are.
Maybe that's pretty, I shouldn't say easy, but it's a lot more fluid discussion.
Yeah.
So you haven't cracked open the Maria DB.
Yeah, I've actually I've got, in this ETL process, they call it this. I probably have 50 queries, different.
Off the new format, 12.1 format.
Well, basically, I've taken what I've done off of Access and I converted them to Maria DB. And I'm probably 2/3 of the way done conversion. So obviously, I don't have anything flowing through a Power BI yet, but I'm doing the
Right. So one of the things that we need guidance on is any change in the database to be able to get some of the allocations and roll through. So ideally, you don't want to have to touch anything.
Well, yeah, that's bingo. And Norm, to me, the centers, the allocation, doing it by percentage, I really think we need to get into get cost drivers.
Yeah.
Instead of costs.
Make it simpler.
Well, to me, it would be, yeah. The other thing is center groupings. We talked about it, but I think we need to have some discussions on center structure.
Yeah.
So, any questions, thoughts, comments? Time for lunch. Good job.
Thank you for
Yeah,
blazing the
thank you.
trail, Daryl.
Mary or Tyler, you still on board?
Yep.
Any parting comments?
I don't think I have any. No. Thank you.
All right, Norm, it's yours.
All right, I'm gonna put it on pause and, I get this. And the other group, they're, Doug, are they still going strong?
No, we're pretty much wrapped up.
Okay, all right, so they know they come in here for their lunch,
Lunch is here.
right, the lunch is right, I think all the boxes are back here. So, all right, well. So, well, I'll check, make sure they know about it. There's ham and, I think, turkey, I think, so. Let's pray. Lord, we thank you for things we've learned, the challenges we've all undergo, and thank you that helping us be better prepared or better stewards of what you've given us. Thank you for this food. Lord, protect those who are traveling. Pray in Jesus' name.